Most traders lose money not because they pick bad stocks, but because they stay in bad trades too long. That's why I follow the 5-minute rule to minimize losses. Here's how it works. As soon as you enter a trade, set a timer for 5 minutes. If the stock hasn't started moving in your favor within those 5 minutes, you exit. No second guessing. It's not about hope, it's about momentum. Good trades usually move fast, bad trades stall. Here's a real example. I entered a pre-market stock right after an FDA approval. Within 2 minutes it popped 5%. I locked profits and moved on. Another time, I entered a stock that flatlined for 5 minutes. I sold immediately for a small loss. It saved me from a bigger drop later. The 5-minute rule keeps your losses small and your emotions in check. No more holding and hoping. Want to follow this system easily? Download my free 5-minute trade timer system. Link in the description. Pre-market trading isn't just chaos, it moves in waves. If you know when the waves come, you can ride them for faster, smarter trades. Let's break down the 4 waves between 4 a.m. and 9 a.m. First wave, 4 a.m. This is the earliest action. Most moves here are from serious traders reacting to news releases overnight. Volume is thin but moves are sharp. Look for stocks with news catalyst only. Second wave, 5 a.m. This is where momentum picks up, more volume, more traders. Early scalpers start jumping in. If a stock is still holding gains, it's a good sign. Third wave, 6 o'clock in the morning. Europe and East Coast traders start waking up. You'll see a second surge of energy. Watch for quick pullbacks and retests during this time. Fourth wave, 7 a.m. to 9 a.m. Big brokers, news media, and larger day traders prepare for market open. This is when volume explodes. Best to exit risky positions early before 9 a.m. volatility gets crazy. Trading without understanding the waves is like surfing without watching the ocean. Want a simple cheat sheet for timing the waves? Download my free pre-market waves guide, link in the description.
One of the biggest reasons beginner traders lose money is simple. They're trading random stocks without a real reason. If there's no catalyst, no news. Don't touch it, period. A catalyst is any event that creates real demand. Breaking news, earnings reports, FDA approvals, buyout rumors, government announcements. Without a catalyst, the stock might still move, but it's usually weak, fake, or a trap. I personally check for news first, every single time. Tools like investing.com, WeBull, and Benzinga give real-time updates for free. Before you risk $1, ask, is there fresh news today? Is the volume reacting to that news? If both answers are yes, it's worth a shot. If not, skip it. Wait for the next real setup. Trading without a catalyst is like fishing without bait. You might sit there for hours and catch nothing. Or worse, you might fall for a shark. Want to set up your catalyst scanner the right way? Download my free catalyst tracker setup guide. Link in the description.
Scalping isn't just about strategy, it's about managing your emotions. And honestly, that's the real battle. At 4 a.m. when you're trading, emotions hit hard. Greed tells you just hold a little longer. Fear screams, sell now before you lose everything. Regret shows up right after you exit, saying, you could have made more. And hope convinces you to ignore your stop loss and just wait a little longer. If you don't get a grip on these emotions, they'll run your account into the ground. So here's what I do to stay sharp when scalping. I set my exit plan before I even enter a trade. I stick to my 5-minute rule, no second guessing allowed. I remind myself that small wins beat big regrets every time. And I tell myself, you're here to trade smart, not to chase perfection. Look, winning scalpers aren't fearless. They just follow their system, even when their emotions start making noise. If you want a simple tool to help you lock in that winning mindset, download the free Scalper's Mindset Control Sheet. Links in the description. Let's be real for a second. If you're trading with your rent money, you're not investing. You're gambling, and gambling always ends badly. If you need that money to live, to pay rent, buy food, keep the lights on, it does not belong in the stock market, period. Only trade with money you can afford to lose. Money that, if it disappeared tomorrow, wouldn't change your life. Here's a simple story. There's a guy working at a warehouse making $3,000 a month. Before he ever thinks about trading, he pays his rent, pays his bills, fills his savings. Then, and only then, he takes $500 he doesn't need to survive. That becomes his trading money. That's how you trade smart. That's how you stay in the game long enough to actually win. Remember, rent money is not trading money. Grocery money is not trading money. Bill money is not trading money. If you want to trade like a pro, you have to act like one from day one. Want a simple checklist to know if you're really ready to trade? Download the free Capital Readiness checklist, link in the description.